How would you characterize these results? It looks like a second half story in terms of EBITDA.
We were very pleased with the results. As you would have seen, they're comfortably ahead of market consensus. That's principally because synergies are coming through faster than expected. It's also true to say that the second half was stronger than the first half. In fact, we saw 5% revenue growth between the first and second halves. And in terms of EBITDA, it was even greater. We were 43% up on the first half. And of course, as time goes on, we get the opportunity to take more and more synergies into the P&L.
The loss after tax seems to have been driven by a series of charges, albeit most are non-cash. Can you break these down for us?
Yes, I mean, by far the largest one was the impairment charge that we took of around 408 million euros. In addition to that, there were amortization charges that arose from the merger of 132.5 million euros. And then we had one-off expenses that related to the merger, some M&A costs and also some reorganisation expenses, which collectively came to 23.8 million. So they were the main one-off charges that gave rise to the loss after tax.
Impairment suggests permanent write-down, but if Germany regulates, as you wish, could these values be added back?
No, it doesn't matter how Germany actually does regulate in the end. Under IFRS, once you have impaired goodwill, it's never written back. But at the end of the day, it is a non-cash charge. And in fact, if the merger had completed just 1 week later, there wouldn't even have been an impairment.
And can we expect similar charges every time a country decides to regulate?
It's possible, but I think very unlikely. There would have to be a substantial impact to the business that wasn't reflected in the share price. I think it's unlikely. Again, I would stress it's a non-cash charge at the end of the day. And also, it really comes about because IFRS forces us to account for what was effectively a merger of equals as an acquisition.
Gaming duties are clearly impacting on the business. What's the effect and why are you paying charges in Spain while the market hasn't regulated there yet?
So gaming duties were up by 27.8 million on 2010. There are a number of reasons for that. We had effectively the full year impact of France. France regulated at the end of June 2010. So that was one factor. And then we also had new markets in which we were paying gaming duty for the first time, namely Spain and Austria. The reason we're paying gaming duty in Spain is because there is a transitional period ahead of the licenses being awarded to operators, and we want to be one of those operators.
Customer bad debts have increased by 29%. What's the explanation?
We always talk about optimizing customer bad debts as opposed to minimizing. And in the first half of 2011, with the closure of Full Tilt and Absolute Poker, there was effectively a one-off opportunity that we saw to grab some additional market share. And as a result, we did look to optimize chargebacks in that period in favor of deposits. But it was one-off, and you would expect to see chargebacks return to more normalized levels going forward.
Now, how much of the announced 75 million euros share buyback have you returned to shareholders so far?
So up until the year end, we had acquired over 15 million shares for just under 20 million pounds in consideration. And then subsequent to that, we've spent another 25 million pounds buying back stock. So all in all, around 45 million pounds spent, or around 54 million euros. And we're roughly 3/4 of the way through the programme in respect of time. And also we've spent roughly 3/4 of the amount that we said that we would on the buyback.
Would you agree that the sports performance was disappointingly flat?
No, I wouldn't agree with that. I mean, it was flat year on year, but of course you're not looking at the underlying growth unless you adjust for the World Cup effect of 2010. And if you strip that out, we're actually up by 5%. Clean EBITDA was flat year on year. But again, that masks what's actually happening there, where you've got increased gaming duties payable, which have been offset by synergies coming through faster than expected.
Casino and games appears to be the star performer. How much of this is down to the fact that they've been the first to integrate systems and product offers?
Well, we launched the no-download casino on bwin in October, and that certainly has been a contributing factor. But actually, the main factors are the underlying organic growth of casino, which, as you have seen before, has been growing strongly year to year. And of course, we also had the launch in Italy of a limited casino offering, which contributed to that as well.
Are you disappointed that poker hasn't capitalised more on the closure of Full Tilt and that one-off opportunity that you talked about in relation to Black Friday?
Well, since the closure of Full Tilt Poker and Absolute Poker at the end of the first half, poker has actually been stable. Would we have liked to see more than that? Of course we would. But unfortunately, the poker players will always naturally gravitate to the largest liquidity pool. And that is PokerStars. We're very happy that poker is now stabilised, and we can take one foot off the brake, so to speak.
Why have synergies come through faster than expected, and can we now expect a further increase to the overall total?
There was no one reason why synergies came through faster than expected. It was a number of factors. In the area of labour costs, we reduced the number of headcount within the combined organisation. But in addition to that, we actually took some expensive contractors who were effectively outsourced, replaced those with employees in our technology centre in Hyderabad. And there's a significant difference in the cost per head for those workers. We harmonised procurement processes, and as part of that, of course, we renegotiated some major vendor supply contracts. That was another area that we generated savings in. And of course, there were some revenue synergies as well. In fact, on the no-download casino that we launched in October also came in higher than expected, the actual yield uplift that we saw there. In terms of the actual target, we already have increased that from what we said at the merger, which was 55 million euros. We've increased that now to 65 million euros. I think before we look to increase that any further, then we need to see the two platforms integrated, and I think then we'll revisit the target at that time.
The year seems to have started well. What do you put this down to?
Overall gross revenue was up by 2% versus the fourth quarter, and all product verticals saw growth, which we're very pleased about. Sports was up 4%, casino and bingo were each up 2%, and poker showed a marginal increase on Q4. Again, I think there are a number of factors that are behind that. I think in bingo, for example, we have new management. Casino is effectively continuing the growth that you've seen for many years now. And sports has had a good start, and we're seeing a good volume of business coming through, and also decent margins. And then there's also, of course, some of these new channels that we have now, such as mobile, which are growing at very high rates indeed.
It seems you're moving away from a party model of affiliates and channel marketing approach to a more bwin style brand approach to customer acquisition and retention. How is this going to impact marketing costs?
I actually think it will be beneficial longer term, and in fact it's something that the former Party Gaming was considering moving to in any event. However, in the short to medium term, I think the bigger impact is going to be caused by newly regulating markets, and how much we spend in each of those markets will depend on how strong the brand is prior to the market actually regulating. If we look at this year, our marketing costs, i.e. customer acquisition and affiliates when taken together, were about 26.7% of revenue. I think that as we move into 2012, that ratio actually could increase in the short term, because of course we've got Spain about to regulate this year, and we've also had Denmark just regulating, and then we've got potentially the getting of a license in Schleswig-Holstein, and we are renewing our marketing efforts in Germany right now.
What level of investment have you earmarked for any launch into the US?
Basically, whatever is required. The size of the opportunity will be assessed, and the appropriate resources will be put behind it at that time. There's going to be a very different level of investment required if the regulation evolves on a state-by-state basis, let's say, for example, in Nevada, as compared to a federal regime. What I can say is that we have a lot of the company's resources focused on this area right now, and we are willing to invest whatever is required, but also so are our joint venture partners in MGM and Boyd Gaming. So let's wait and see how the regulation unfolds, but I can assure you that we will be there to capture that opportunity.
How much investment are you putting behind the social gaming strategy?
Well, because of the high multiples in this space at the moment, we're not looking at making any substantial acquisitions in this area. But that having been said, we certainly do intend to partner and build organically in this space. We've got significant assets that we think that we can leverage in this area. We've got a highly motivated workforce, and I think that we can build some significant shareholder value in this space going forward. But watch this space for further details.
Are you confident of achieving your synergy targets for 2012 and 2013?
We are confident. The only risk that there exists that I can see is really the one of regulation. So if we get new markets coming up that force us to actually reschedule the integration of the platforms, and that could effectively defer the realization of some synergies. In terms of the actual quantum, I'm very comfortable that we will deliver on those, and if anything, I think there could potentially be further upside. And just for the sake of clarity, I'm not suggesting there is anything on the horizon right now that might delay that timetable, but it is always a possibility.
Assuming you get a license in Schleswig-Holstein, what do you think will be the impact of taxes in Germany, currently your biggest market in 2012?
Well, the regime allows all products except bingo, and the gaming duty rate is 20% of gross gaming revenue. We have identified certain savings that could mitigate the impact of some of those taxes. We think in 2012 and 2013 there's probably a further 10 to 15 million euros per annum of savings that could be generated, and thereafter we think the figure will be between 15 and 25 million euros per annum of mitigating savings.